What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, we're going to go over the 5-minute time frame, looking at the NASDAQ 100 futures market. Again, I know a lot of you guys are looking to pass prop firm evaluations. You're looking to get funded. You're looking to get those payouts, maybe add multiple accounts, and or even trade your own personal capital on your own brokerage account. So in this video, we're going to go over the 5-minute time frame. We're going to look at some setups that I like to scan for and look for on a day in and day out basis. Now, again, with thousands of different indicators out there, thousands of different strategies out there, it's all about finding the strategy that works for you and one that you've back tested enough and taken trades on to feel comfortable with. Again, remember, in trading, one of the biggest things that holds a lot of traders back is emotions, but lack of confidence in trusting the price action, which comes down to not trusting your strategy, your system, right? So again, full disclaimer, is every strategy perfect? Of course not. Are you going to win every single trade? Of course not. How we mitigate some of the risk that is involved with trading is being able to have proper risk management. I know you guys have heard this. It's been, beaten over your heads 1,000 times. Risk management, psychology. However, if you just, don't have to really stress it all that much. I don't want to beat a dead horse, but as soon as you get to, a position size that you're comfortable with, meaning when you take a trade and you take a loss, you don't get too emotionally upset. And when you win, you're pretty confident, kind of stopping out for the day and, coming back the next day. That's all we need to really get to. Okay. We just need to find your sweet spot. For some people, it might be one mini contract. For other people, it might be 1 or 2 micro contracts. You need to figure out where your emotional tolerance level is. And then from there, we can start attacking these setups in this game plan. So what we're looking at here, 5-minute time frame, I've got the 5 SMA on my chart, as well as the 20 SMA and the 200 SMA. Okay. So all of my, my change in trends, all of my setups that I'm, necessarily looking for are going to come around the 20 SMA. I use the 5 SMA to kind of give me a guide. Are we power trending or are we not? Okay. So when we're in a power trend, typically, we're not going to get a whole lot of price action that's going to come back and test that 20 SMA because we've got a power trend going over the 5 SMA. And you can use the 5 SMA as a stop loss. You can use it as a gauge. You can use it as a confluence to hold your trade longer as long as we're trading over and not closing below. And then you can use that 200-day moving average as your big macro intraday change in trend. Okay, so with that being said, I always mark out the first hour highs and lows. With this, what I'm looking for here is I'm looking for the market to open and I'm waiting those first 30 minutes. Okay. So some people call it an opening range break. It would be considered a 30-minute opening range break. I call it an hour candle opening range break because I'm looking at data from the pre-market until when the New York session opens. So from 9 a.m. to 10 a.m. New York time, that's what I'm looking at, that 1 hour block, okay? I'm looking at price action in between that area. Typically, when the market opens, price can fluctuate. It can go up, it can go down. The ranges are huge, and a lot of times traders can tend to get caught in a lot of this price action, okay? So if you have trouble where you're getting caught in a lot of price action and losing trades very, very early in the morning, one thing that I would definitely recommend to do is to obviously document, right? We want to know, 70% of our losing trades are coming in the first 15 minutes of the market open. Maybe that's telling us that we want to sit out at least 15, 20, 30 minutes before we start taking trades. Or maybe 90% of your winners based on your strategy or the strategy that I teach is successful. That's going to tell us that we really want to focus on that momentum opening drive play, right? So based on what I'm looking for today, this morning, it's April 23rd. There wasn't a whole lot of setups. There was 2 really, really good ones. One of them that happened an hour before the market opened. So I'm located here in California. Typically, most days of the week, I try to get up around 5 a.m. Okay. because normally at 5:30 you've got numbers, news, headlines, something that comes out. The market starts to wake up after 5:30. So depending on where you're at, correlate that to your time zone. So for example, the market opens at 9:30, 8:30 a.m. is what we're looking at, okay? So you can see here at 5:30 in the morning, right? 8:30 New York time, we get our first close over the 20-day moving average, okay? So we get our first close over the 20-day moving average, and your entry for this particular long situation is going to be the following candle. And all we're looking to see have happen is we want the candle to close over the 20 SMA. And again, I know a lot of you guys in the comment section have been asking, how do I get the green and the red arrows to kind of indicate it to me? It's not a special indicator. I haven't really found it on any other platform. I trade options, okay? A lot of the time. So 90, I would say about 80% now, 80 to 90% of my income comes from trading options. I'm a full-time options trader. I've been trading options for over 10 years now. It's going to be 10 years in the summertime. So around 10 years time. I've been doing this full-time for around 8 years. Now I've recently transitioned into adding additional sources of income to my business, my trading business. And one of those additional sources of income is futures trading through prop firms. Right now I'm funded with Top Step as well as Apex Trader funding. Okay. So all of my strategies, they work for trading options, Forex, crypto, it doesn't really matter. Price action is price action. As long as we can look at a candlestick chart, we can trade my way of trading. Now, again, with that kind of being said, and with that, taking that into context, what I'm typically looking for here is when price confirms the high wick or top of the candle that closes over the 20 SMA, I'm looking to get long. So I'm waiting for this 1 5-minute candle to close over the 20 SMA. And then when the next following candle takes out the high wick, I'm entering my trade. Again, going back to the red and green arrows here, it's just on Thinkorswim, okay? So I don't have any special indicator. Like if I right click, okay, if I right click on my moving average and I go to edit study, all I have to do is show breakout signals and make sure that's clicked to yes. If I was to take it off, those arrows are going to disappear. I click yes and it's on. Again, if you're trying to get this on a different platform, I don't know how to help you. I only know how to use my platform. Again, when I trade through the prop firms, I have multiple monitors here set up in my office. All I'm basically doing is watching my middle screen, which is my Thinkorswim platform chart. This is where I do all my charting. And then I execute my orders on the other monitors where I'm just market in, market out on those futures orders. Okay. So moving along, what we're looking at here is once we get that confirmation, we're going to get into this potential trade, and our stop loss is always going to be, okay, below the reason why candle. Okay. So the reason why candle is the candle that's closing over the 20 SMA. What's the reason why you're taking this trade? Well, because potentially we have a short-term change in trend, meaning we've closed over the 20 SMA from previously trading below it. And now potentially price action might be shifting momentum. So my stop loss will always be below that. You can use other variations and other means to put a stop loss. You can use a close under the 20 SMA. You can use, the average true range. You can use all sorts of ways. This is just the way that I do it. And typically what I do is I use a candle close below that reason why or above that reason why, depending if I'm going long or short, to stop me out of the trade. 9 times out of 10, I'm going to remain in the trade, even if we are wicking or trading below that reason why until we close. So sometimes I might give up a little bit more of a loss due to I want that extra added confirmation. Now, you figure out your position sizing by taking the range of that reason why candle. So for example, the range of this reason why candle is 15 points. Okay. So I want to make something very, very clear. If you were to get into this trade, as soon as it confirmed, essentially you would be in this trade still, and it is 9:34 a.m. Pacific Standard Time. You would be in this trade 3 hours later, and you would be in this trade almost up 200 points. Okay. Sounds fantastic. It sounds great. Again, it all depends on the style of trader you are. If maybe you're someone who's trading one micro contract or two micro contracts and you're looking for those big trends, you're looking for those big all-day moves, then maybe you set your stop loss and you let this continue to ride until it gives you a reason to be stopped out. And one reason to be stopped out would be a close below the 20 SMA, a close below the 5 SMA. It would be something where you would look to take profits. You have a close below the 5 SMA here. It would be a 5-minute ATR range, or it would be your reason why range, so 15 points. So again, depending on the number of contracts you're trading is going to depend on how long you're typically in trades. For myself, I trade a little bit more size than one or two micro contracts. A lot of the times I'm trading 1 to 2 mini contracts, if not 5 micros. Typically that's my sweet spot, depending on how I feel the price action's moving. Normally closer to the open, after New York opens, I'm going to be trading 5 micros just due to the volatility and the range. And the later in the day, when price action starts to slow down and the ranges aren't as big, I'll move up to 1 or 2 mini contracts. Okay, so if someone is trading 1 or 2 or 3 or 4 or 5 mini contracts, the odds and probabilities of you actually sitting through this trade for 3 hours through these big ups and downswings and ups and downswings is probably slim to none, depending on the prop firm that you're trading for. Like, for example, if you're trading on Apex Trader Funding, those type of accounts have a high watermark trailing threshold, meaning that if you're up $2,000 in profits and it goes down $1,000 in profits, your trailing threshold also moves down $1,000. So again, it all depends on what you're trading, and how you're trading is going to depend on how long you're holding these trades and what price targets you're looking for. For example, myself, I'm a very quick scalper. Again, a lot of my trades, I'm in and out within a matter of minutes. I'm not really looking for a big move. If the average true range or the range of my reason why candle is sitting around 15 points, then I'm highly going to be considering taking profits close to 15 points. Does that make sense? So yes, even though I am giving up a bunch of gains, potentially, you never truly know that the stock price or the underlying asset, whatever you're trading, is going to continue to go up in this manner. For all we know, the trade could have came up this much and then came all the way back down. So I'm always a big advocate of protection, getting in, getting green, and getting out. The next setup that I want you guys to look at, I've got this first hour candle, right? The first 30 minutes of the market. So between 6 a.m. and 7 a.m. or between 9 a.m. and 10 a.m. New York time, that range, that opening range, that first 30 minutes, including a little bit of that pre-market action, I always mark out that range. So I've got the first hour lows, I've got the first hour highs. And what I'm looking for here is I'm looking for price to confirm and start to trend in one direction. So once we break those first hour highs, and once we start to confirm those first hour highs, that new high price, I want to be getting in somewhere here, somewhere here. And once I get in, my stop loss is going to be very simple. Okay. If I'm looking to get in somewhere here, once we've broken the first hour range and start to confirm it, I'm always going to use a previous 5-minute candle as my stop. So you can correlate how many contracts you want to trade depending on the range of that candle. So for example, this candle here is a 25-point range candle, meaning every 1 micro contract that you're trading, you're going to be at a potential loss of $50. So 2 micro contracts is $100, 4 micro contracts is $200. However, if this continues to ride and you're able to get 20, 25, 30, 35 points, you potentially could be making $200, $300, $400 relatively very, very quickly. Those are the only 2 real setups that I've seen today. One of them started way in the pre-market, right? Which a lot of people don't even trade this early. And the next one was confirming that first hour range. Now, once we broke that range and put in a high, we did pull back. You can see previous resistance turning into new support. And then we got that nice bounce back up. Again, pulled back, put in a higher low, and then have popped back up. So this is very, very good price action today for the NASDAQ. I think it's much needed for the bulls. you know, they've had extended selling, 5-6 days worth of selling. Again, does this mean that the selling is over and at the bottom is in? Of course not. You know, it could be, but it could very well not be. Again, remember, things aren't just going to go straight down, straight down, straight down for months and months and months on end. And they're not just going to go straight up and up and up for months and months on end. You're going to get those days or those weeks in between where you get those dead cat bounces and you get those dead cat pullbacks. Okay. So again, I hope this video kind of helped you, give you a general idea of what I'm looking for with the 2 areas of interest that I'm kind of really focusing on. It's these 20 SMA plays on a 5-minute time frame. And it's also that first opening range break. Okay. I want to see some continuation through that opening range break. Again, if let's say, for example, you missed the opening range break, or you're not a big fan of taking the first move, right? Wait for it to pull back. Okay. So always break, retest. And once you get a breakout to the upside is where you're going to want to take that long position again. So you would have had an entry here over 17,560, ride that into the highs. Again, you always want to take profits into supply. So make sure you're taking profits into those supplies. Hope you enjoy the video. Make sure to like, comment, and subscribe, and I'll catch all of you guys on the inside.